At the moment, Uganda has quite a huge crisis in regards to housing. According to the recent set of 60% of Ugandans, that's more than 50%, are living under poor housing conditions. 96% of Ugandans can't afford the cheapest mortgage. That's a 2-bedroom house. You can imagine.
Allah is telling us that when you find that somebody has a genuine reason why he's not paying, give more time. This is a command from Allah.
Oh.
Give more time. But it must be genuine. The cause must be where?
Must be genuine.
COVID has come in.
Yes.
Fire came in and hit my business.
Someone became sick.
Somebody became permanently sick for 2-3 years.
Yeah.
So you can't profit here from somebody who has got such a problem. If you are getting this payment because you have delayed, you don't want to consider, that's
a different arrangement.
That's not that one. They can even, the Sharia law may allow you to penalize, but you don't take it as your income.
This is the Policy Digest, a Center for Policy Analysis podcast that explores how African societies are governed and how people and their leaders are shaping the future of their communities. Through candid conversations and insightful analysis, we aim to provide a deeper understanding of the political, economic, and social landscape of Africa. So sit back, relax, and get ready to explore the diverse and dynamic world of African governance.
All right, welcome to the 49th Policy Digest podcast. As you could be aware, Parliament just passed the Mortgage Refinancing Institutions Bill. So ahead of the 44th step of convo, we decided to have a conversation with the Chief Finance Officer of Salaam Bank, the first bank in Uganda that was licensed to extend Islamic banking services in Uganda. And I just want to highlight that the Chief Finance Officer, who is Sulaiman Walugembe, holds a postgraduate diploma in Islamic finance from the Bahrain Institute of Banking and Finance. Also holds a master's in finance, that's from Coventry. A certified member of SCCA, CPA, CMI UK with extensive regional finance experience. So we want to just have a bit of context, of course, as we start, but you're most welcome. We are happy to have you here.
Thank you, Joseph.
Yeah, just to set context for the bill. So at the moment, Uganda has quite a huge crisis in regards to housing. According to the recent set of 60% of Ugandans, that's more than 50%, are living under poor housing conditions. 96% of Ugandans can't afford the cheapest mortgage. That's a 2-bedroom house. You can imagine. 96%. 60% already in informal housing, 96% unable to afford the cheapest mortgage. Now, if you go to Bank of Uganda data, it will further show you that the average income rate for a person is 220,000 in urban areas and 168,000 in rural areas. These are the people that want to access mortgage financing. But so it's important to notice that mortgage financing is very crucial to unlock housing. It can be a very functional part. So we want to start on just the first question on your end, and I know you have a rich banking experience. What's the biggest barrier stopping Ugandans from accessing mortgage finance today?
Joseph, thank you very much. From the statistics you have read and from the perspective of the policymakers, I think that's the reason why they have come up with this act. I think now it's no longer a bill. Once it's passed by Parliament, it becomes still a bill till it's signed by the President.
The President, of course, yes.
Okay, so the biggest barrier, we have to know, mortgage is a long-term financing because mortgages they are capital intensive and long-term financing. Now, long-term financing, what does it call for? When we are in banking or in finance, time value for money. The longer you hold my money, the more expensive my money is. So the biggest barrier is the cost of the mortgage. Because financial institutions are seeing that their money is going to be tied for a longer time.
Longer time, sure.
Okay? Because the bank will finance the developer for you to pay for mortgages. Average time is 25 years. So you can imagine.
That's a long period. Someone holding your money for 25 years.
So now the question is, how many people in Uganda, in terms of cost, can afford that? So you'll find that they will go to the commercial banks and they are charged highly. That's the first point. 2, how many can run that marathon?
25 years.
25 years when your income
paying
is
like $1 million of your salary.
So it means when you start on it when you're 25,
you'll finish when you're 50.
At 50. Okay.
Paying 1 million every month.
Paying 1 million every month. So how many Ugandans can sustainably do that? So the major cost is the major implication is the cost. And the drive of the cost is the longevity. It's quite long.
It's too long.
It's too long.
Where do banks get this money from?
Banks get this money from depositors. Now, the major reason when you read through the preamble of this act or this bill,
yes,
the issue is the mismatch. When you are in balancing, when you are in the Bank of Uganda you are regulated by Bank of Uganda. They are always watching your the tenure of your deposits and your liability, your assets and liabilities. They must match. So the mortgages bring a lot of mismatch. Why? Imagine you are financing somebody for 25 years. You are paying upfront now. The depositors have to be, these are biggest percentage of our deposits are demanded deposits. I keep my money, tomorrow I want it.
It arrives today, tomorrow someone has to take it. Yes.
So if people do fixed deposits, okay, they are there, but still fixed deposits mostly 1 year. You are financing for
25
years. Yeah. Even if it's 10. So longer term financing is very expensive for that. Why? You have to cover
the risk
of mismatch. So that's one of the biggest bottleneck. And this act is brought to bring out, they're looking for ways, how do we finance really? How do we help financial institutions to see that this mismatch, what? Because technically speaking, not many banks will do mortgages.
They're not profitable for them. So
not only profitability, the mismatch. You must be having a big muscle to lend somebody for a long time because somebody is tying down your capital for a long time.
Which you would be using elsewhere. And I wanted to just touch on something important there. So I understand that Islamic finance respects certain ethical principles, but also that this specific bill would create room for mortgage refinancing institutions through an Islamic refinancing window. How does that reshape the landscape?
That is, I can say it will change, but that still it is still young, because even the Islamic financing model is not yet developed. We are just starting it. So it means there must be enough financial institutions providing the mortgages. Okay? Primarily, because the mortgaging, refinancing institutions is another second layer. These are not people who are going to go to the markets to look for people to take the mortgages. The financial institutions have to do themselves.
So the refinance institutions
now will give money. They will be technically buying the mortgages from the commercial banks. So technically, that's like we are helping you to bridge that gap of a long-time financing. Don't make it too expensive for people. Let's try to bridge that gap for you. That's what the financing institutions. So the window is opening up now, like for Salaam Bank.
Yes.
Provide the mortgage on Islamic financing principle. Don't worry too much about the longevity of your financing being tied out. There is another Islamic financial, another institution, mortgage refinancing institution, which is compliant with the Sharia
principles.
Yes. Because one of the bottlenecks we are having today in Islamic financing in Uganda so far, because we are still at infant stage, is the ecosystem. All of it is not well developed. Now, this bill, to put that window to license institutions to do it, means An institution will come. There is to do the mortgage refinancing.
Yes.
Then it will apply for a window, same institution, to do it also for on Sharia basis. You get what I'm saying?
I'm
So
following.
it means it doesn't need a one institution, another separate institution, which may say we don't have enough market for it. You know, it's quite a big challenging thing when you get it. Now, for us as a Salaam Bank, we are an Islamic bank.
Yes.
We can't do any conventional. Whereas if a conventional bank gets a license, they can finance you either way. So when you want Islamic principle, you go in that window. When you want conventional, it's the main thing. So this window, provided in the bill, opens the way to widen the ecosystem. So it means as Salaam Bank now, or any other financial institution that complies with financial Sharia, can do mortgage financing. Because currently the way the mortgages are
Environment,
issued,
yes.
if you want to comply with the Sharia, you will not go in a conventional. Now, for you come to like institution like Salaam Bank, we are still in infant stages of starting issuing for Islamic financing. So it means we have not yet developed the product for mortgages. Why? You are still mobilizing yourself on the ground.
I just want to project, maybe say 5 years from now, assuming the president signs off this bill, Bank of Uganda starts regulating. What role would you see Salaam Bank playing in Uganda's housing sector?
Salaam Bank has to play a very big role, even without this bill. Why? Islamic financing is too much asset-based model. So somebody acquiring an asset is one model where it is very easy to do. Very easy.
Why is it easier than other models?
Because one, there is an underlying asset which has not too much, there's not too much, there are not too many corners. Other transaction, for example, if I'm to do other models of financing other than a physical asset, we need a lot of modeling. And sometimes customers are not comfortable. Of course, they are complying, but sometimes they come because they are being introduced the system first time. It will require asset, what transaction is behind, whatever. It's not the same as the service. So for Islamic financing model, because the first principle of Islamic financing model, any transaction there must be an underlying transaction or an underlying asset backing your transaction.
As collateral?
No.
As?
Not as a collateral. The principle, for example, in Salaam Bank, we can't give you cash to just go and buy your asset.
Or you have to see the final output of the asset you
No, when we call it transaction, for example, our model, if you are to do the first, most of the models require you to first own the asset in names of Salaam Bank. Come and own the asset, sell the asset to the final person who wants it. That model is different from you for us giving you the money, you go buy your asset. You get what I'm saying?
Yes.
So the basis on which, the foundation on which Islamic financing sits is asset-based transaction and transaction-based transaction. Asset-based financing. And so in other words, I can't give you money when behind it, there is no transaction.
I get you.
There is no asset that is in a transaction. You see like bonds.
Yes.
When they're issuing bonds, technically you are lending money to somebody.
You go back with a paper.
Just take a paper. The equivalent of Islamic, the equivalent of bonds in Islamic finance is called the sukuk. A sukuk can't be just a paper. It is a share certificate giving you ownership to a certain asset, so you first have to create an asset.
Oh.
For example, if the government wants to borrow using Islamic sukuks, now they borrow with the bonds.
Yeah, I saw that language.
Yeah.
So
if they are to borrow using Islamic
sukuks,
they have to first do an underlying transaction. Let me give an example. Today, we are seeing express highway.
Yes.
It was constructed using some private money. That's why they are charging us.
From the Exim Bank.
So technically, you would create like that road that we are going to finance. The sukuk we are issuing is to finance this asset.
This asset, yes.
The money that's going to come from that asset is what we are going to pay to the sukuk holders.
Yes.
So in other words, you can't just borrow money and go and use it for anything else.
Which promotes more accountability for the money which has been provided for an individual and for the government if it were to take.
So that's why the Ministry of Finance, Bank of Uganda, they are in the process of developing this, but it's taking long to structure them. Why?
Because the interest can't be managed.
Identify what you are going to. If you want to construct a hospital, the sukuk holder is like holding a shares in a hospital. The return must
in short,
be,
they own the hospital.
Yes, exactly.
Broadly. Because they have financed it anyway.
For a short time, then eventually as you pay it, with the return coming from hospital,
you significantly own it progressively.
Then till you exit.
So that's one principle of Islamic finance you talk about. Do you want to touch on the second and maybe also
No, I was talking of the base.
Just the base.
The base on which Islamic financing sits.
Sure.
Transaction and asset-based model. So I was bringing it in form of mortgage, that Islamic Salaam Bank has to play a role in mortgage issuing. Why? These are transactions. People want to acquire houses. Houses are assets.
Tangible.
So they can be known. So that transaction is very smooth. And the biggest part of our financing so far we have is for people acquiring property. We are not doing it in the mortgage way, but this is what we are doing for them so far. So Islamic financing model in terms of asset acquiring is that's where its base is. Two things, acquiring proper and trade. Okay, so those are
because there can be a guarantee of assets. And
no, because of the prohibition of interest. Interest is when I give you money and you are paying me excess of it without minding where this excess is coming from. That's the interest.
Yes.
That's the riba. Whereas in Islamic financing, I can't get money, any excess of what I put, unless this excess is generated from a trade. So that's why an Islamic bank, Salaam Bank, will buy the asset, own it, sell it to you. The ownership is temporary. That's why you come, you identify the house, we sell it, we buy. You do the negotiation, we buy. Then we sell it to you, we give you the spread of the pay. So what are we making? The profit between what we have bought it and what we are selling it to you.
People say that let's say mortgages in that direction are likely to be cheaper than mortgages we get from other institutions.
Exactly.
Maybe let's end there. Why are they cheaper? Or why would they be cheaper in this world where the bill is in force?
I have not quite sat down to do the calculation, but from the model perspective, where I would expect it to be cheaper, one, the Islamic financing interest moves with time. The Islamic model, the price is set once for all. So it will not shift with interest rates. It will not shift with the many, because interest has many variables that determine what?
So on your end, what determines the interest is
the
limited.
Profit is, of course, the period will determine, but once something is set, it's set forever. You can't change your mind after the transaction. You have entered into the transaction. Two, you can't change because somebody has delayed to pay. No. You delay to pay, we don't change. You are not allowed to change it.
Okay.
You restructure, you don't change. So everything is not allowed to. So those are the core principles. Which
the traditional mortgages allow for restructuring. Say if you pay a large chunk, the percentage can be restructured. Why is it that the percentage on your end does not restructure? If someone say pays like a huge chunk of the mortgage.
No, the question is, if you restructure, have you done any transaction?
Or the principle is on whether there is a transaction.
What you agree from the beginning has to be
still binding.
It's still binding forever. Yeah. If you are restructuring to help a person to pay. not you to benefit. That's the Islamic principle. You are restructuring to help me pay.
So if someone was struggling, or traditional banks would do is to pretty much, take on the property.
Yeah, what they do usually.
So for you, do you restructure to help the
we
person?
are restructuring to help you pay.
So there's that element of restructuring to help.
Yeah, because in the Quran, Allah, we are the basis of our...
technically, yeah.
Yes. The basis of our... Allah is telling us that when you find that somebody has a genuine reason why he's not paying, give more time. This is a command from Allah.
Oh.
Give more time. But it must be genuine. The cause must be where?
Must be genuine,
COVID has come in.
Yes.
Fire came in and hit my business.
Someone became sick.
Somebody became permanently sick for 2-3 years.
Yeah.
So you can't profiteer from somebody who has got such a problem. If you are getting this payment because you have delayed, you don't want to consider, that's not the kind they
That's a
about.
different arrangement.
That's not that one. They can even, the Sharia law may allow you to penalize, but you don't take it as your income. You are penalizing as a punitive action. And you are not supposed to recognize that your income. When you come to any Islamic bank worldwide, I've seen them when I was in Bahrain, I used to work with them. You will find an account called charity fund. If we penalize you for not paying, this income
goes to the charity
fund.
It does not become profit or revenue for the institution.
It can't come, and the Sharia board is very strict on such money. You don't eat it. You don't even use it for marketing. You don't even use it for your corporate social responsibility. Go and give it quietly. Okay? Go and give it to people quietly. Go to somewhere, the people are needed, they want it. Do it to them quietly. Don't bring cameras. Don't bring it what? In other, don't benefit from it, because if you bring cameras, you are benefiting from publicity. Don't give it for people who are going for Ramadan. No. Give it to people who are real need other things.
Quietly.
Don't bring your cameras. Don't make your publicity. For such type of monies, you are penalizing somebody. The objective is to restrict an Islamic bank from benefiting, because you
might end up start giving fines as a source of revenue.
Fine as part of your, because it's very enjoying.
Which banks do regularly these days?
You find a big line of monies bank. You see what they call a commercialization.
Very clear source of revenue.
Remember what we have been crying from about this express penalty. So it was like people had now started to say now the mainstream of income is to find people. Can you imagine that situation?
And that can't be sustainable.
It can't be sustainable.
I just want to close here with one last question, and to be the last really, which is you said you worked with some Bahrain Islamic finance institutions. How has Islamic finance transformed such communities? How has it transformed such communities? And if we applied it here, what kind of benefits, apart from the ones we've talked about, of course, would we be getting?
Islamic finance is a very transformative model when we apply it. When we spread it in Uganda, we are going to see many benefits. One, the biggest one so far we have is the big financial inclusion. Do you know many Muslims? Because I don't want people to misconcept that Islamic finance is for only Muslims. But many Muslims are excluded because of their fear of riba. You know, among the big, and the Muslims, many of them are in business.
Yeah.
Many
significant.
Of them. So a big number
will be included.
And we are seeing it in Salaam Bank. A big one.
That's good.
We are seeing many businessmen coming to say, I was only in this bank, I'm working with many banks, but I don't borrow. So now they are bring out their projects now to roll out their projects.
Because Salaam Bank gives them the structure.
Yes, Salaam Bank has come out. Okay, let's come and do this. Second, so that is a very big issue, because one of the sins, we call them the kaba'ir, the big sins, 7 big sins. There is riba in Islam. You taking riba or paying riba. Riba is wider than interest, but interest is the biggest component of riba. So Now, you are bringing that inclusion. Two, there is a lot of fairness in the transactions. When people will test them with open minds, they will find that, okay, we have to go through this model. Three, people are borrowing recklessly sometimes.
That's true. Does not sound religious. That people are
Not religiously. Me have talked
Definitely.
even to the people who have borrowed. Sometimes people borrow religiously. Secondly, they divert funds. Do you know that thing is contributing
From government individuals?
Yes.
Yeah, of course.
Some people have contributed a lot. That's borrowing recklessly and the diversion of borrowed funds. Not even individual. If you borrow 100 million and the bank gives you 100 million, chances you will have shown all your proposal, but you will divert a big chunk of it. You will not apply it. And that becomes one of the biggest reasons why people fail to pay their loans.
Yeah, because you didn't apply the money in a
You didn't apply. You show the proposal. I'm going to finance my business. I'm going to put 100 million here and there. It will produce like this.
So put 60
You end up putting 50. Then that's when, because once 100 million falls into your account, my dear, you feel it's my money. This is my money.
Yet it isn't.
You will forget that's borrowed what?
Money.
Now, in Islamic financing, we don't do that. We normally do the asset ourselves. You want a house? Identify it. We pay the vendor. Because we are the buyers.
Anyway.
Okay? We are the buyers.
That's not your money.
You go and negotiate up to the last penny.
For us, we wire directly.
Then we tell you the vendor, give us the invoice. We pay the vendor. Simple. Now you start paying us. Technically, what you wanted from the house, you're going to get it fully. But now what happens if I want to buy a house of 1 billion, I will borrow 1.5. I will use it as an excuse to borrow so that
to
I
get
can
slightly
so I fall
get a
myself
haircut
into big debts. So the Islamic model really transforms people.
Fairness, transparency,
reckless borrowing will not be there.
Even for government.
Yeah, even for government. Yeah. Now you say government, if it's to give
Sukuk bond.
It means, because that's the area, if we don't generate money from there, we shall not take it. So we shall not lend you. Okay? Take us the money, don't be like a Roboa hospital.
I totally understand. And as we end the last one, a very last one, Haj, a very last one. What is the last benefit we get from Islamic finance?
The very, very last one, I can say, is that one I've said, to me, is the major one, to avoid reckless borrowing.
And those two are very important, yeah.
Reckless borrowing. Somebody will not, you must see, we value the asset. You take what exactly you need. Although to many people, when they are coming, they don't feel, I would have loved the cash to take to my, if we are to finance you through other models, because the other models, when we partner with you, we are not coming as a lenders, we are coming as your partners.
As an investment partner.
As an investment
banker,
and we can't put your money where we don't see. Even the Quran, Allah tells us, never entrust your money with it. He calls them sufaha, the people who are fools. So if you are not transparent, you are not allowed to entrust you with your money. So anywhere you put your money, because it's a trade model, we must benefit from the returns from the investment. We follow it.
Thank you, Haj. This was very helpful, and I trust that those that have listened to the podcast have learned quite a lot. Yeah.
Thank you very much.
Thank you so much.
You're welcome.
The Center for Policy Analysis is an independent think tank shaping parliamentary democracy, governance, and public policy in Uganda and beyond. Our mission is to shape public policy and strengthen democratic governance by delivering high-quality research, fostering collaboration, and empowering citizens. Our vision is a democratic society with transparent, accountable, and responsive governance systems. What sets SEPA apart? A unique consortium model that integrates expertise from diverse partners for multidisciplinary approaches. We pioneer thought leadership, leveraging tools like artificial intelligence to enhance impact. Through collaborative advocacy, we empower stakeholders to engage with legislative processes, all while combining rigorous research with a deep understanding of Uganda's political economy. Our flagship initiatives include Parliament Watch Uganda, that bridges the gap between the citizens and Parliament, the Policy Digest podcast that explores politics and public affairs across Africa, and the SEPA Convo, our bi-monthly X-Space tackling key public issues. Our work spans parliamentary democracy, human rights, public health, road safety, climate justice, artificial intelligence, and more, including the Africa Regional Conference on Parliament and Legislation. Join SEPA in shaping policies, amplifying voices, and building a democratic future. Visit www.sepa.or.ug to learn more or follow us on social media. The Center for Policy Analysis, a leading public policy think tank.
Thank you for listening to the Policy Digest podcast, the Center for Policy Analysis podcast that is profiling African ideas and people that are shaping the future of their communities. Subscribe to all our platforms on YouTube and Podbean.